Hello, and welcome to another episode of Scotch and Stocks. Don't forget to freaking subscribe. Summary time. Today was an interesting day. This whole week has been very hellish for stock investors. Stock market has been crazy. A little bit of whiskey. Hopefully, it tastes good going down. After my summary, I'm going to drink it and I'm going to bed. So it's going to be quick and it's going to be easy. So, first things first, Monday, deep sea spooked markets, thinking that chip investments were gonna disappear. Not gonna happen. Capital expenditure by the big boys is starting to go up as results from Meta. We're going to be discussing in the episode today. We're also going to talk about what the FOMC did and what Jerome Powell is expecting going forward. The next meeting is going to be in March, so stay tuned for that. We covered it live, so make sure you subscribe for more content. But let's walk you through what happened today. Today was a great day. Today was a great day. Microsoft beat earnings and revenue expectations, but the stock was down right after earnings because they missed on cloud revenue. This is to be expected given the fact that Copilot was now being packaged with Office for regular users and family. Um Interestingly enough, market seems to be recuperating a little bit, and the call tomorrow we're going to be covering it, or at least the summary. So stay tuned. Tesla missed on earnings and missed on revenue, but this was expected as they missed deliveries. This data was already given, but people are looking into the future for Tesla. People are not paying attention to the now. Tesla is now a tech company, is the way that everybody wants to look at it. I disagree. They're a car company because they sell cars. Again, most of the businesses here produce something and then they are going into the technology side of things. So Microsoft sells software, cloud, and they want to produce AI. Tesla, same. Meta is an advertising company that wants to do AI. So they seem to be going that way. The big surprise today was IBM. IBM ended up beating earnings per share and revenue. This is something that I want to do a deep dive, so make sure to hit that like if you want to find out more, because I want to do a deep dive and potentially share the video when I know more because I haven't been paying attention. And Meta had a fantastic quarter. Earnings per share beats by almost $1 and what, 24 cents? It was fantastic. It is great. Revenue beats by one, like more than $1 billion. It is great. Now, the interesting point, and this is for NVIDIA investors such as myself, please take whatever I say with a kilo of salt. We don't know. But we have capital expenditures going from 60 billion. So, sorry, from what the market was expecting to be 52 billion all the way from to 60 to 65 billion in 2025. And they're expecting expenses to also go up. They didn't provide any guidance for 2025, which might have spooked markets a little bit, but again, they do see a potential for growth in revenues and earnings going forward. They're still spending money in Reality Labs. This is likely to continue because they want to be in the frontier of what happens next. We are in an environment where if you're not innovating, you're staying behind and you become an IBM. But right now IBM is doing great, so now we don't know. This week has caused so much uncertainty, so much doubt. All investors don't even know where we're going. Trump is talking about invading Greenland, invading the Panama Canal. Nobody knows what to take seriously at this point. He sounds a bunch of pieces of paper, and we're expected to just believe that the market's going to go up. Well, investors don't buy it. So that's what we're seeing right now in markets. And did I talk about the FOMC? Dragos, did I talk about the FOMC? I don't know. I don't even remember. The FOMC, I'm just going to say it again. They freaking held the interest rates flat. They are doing quantitative tightening by reducing their balance sheet. That is continuing. And they are going to be data dependent going forward. I think I already said that now that I've said it. But again, data dependent, data dependent, data dependent. And Donald Trump does not matter. Donald Trump can sell whatever he wants to Jerome Powell. But right now, the person in power in the Fed is Jerome Powell. And he's going to make the best decision possible for the economy without taking into consideration what Donald Trump wants. He hasn't even called him. He hasn't even called. So I think that's it. We're gonna have GDP tomorrow, and we're gonna have PCE on Friday. He was very central, Jerome, which tells me that the data is probably gonna come in line with expectations. If the data gets better, we could see further cuts down the line. If the data does not get better, then we are likely to not see any cuts and potentially some hikes, but nobody's talking about hikes. Don't mention the hike word because we don't want that. We don't want that. Oh man. I'm losing less money at the end of the day. Thank you very much for watching. Cheers, everybody. It's been that kind of week. Peace. Oh, that's so good. That's so good. Oh, yes. Freaking drinking whiskey like tequila is outrageous. It's outrageous. Let's write it down. 312 00. That was great. That was great. Cheers. Oh, yeah. Cheers. I think it's to the point. I need to get